Thank you very much for inviting us, and thank you for joining the panel. So, guys, we have very interesting panel about the stable, what is coming. So, for 35 minutes, we'll have the opportunity, moment to tell a little bit more about the stable coins, how they are moving, how is the policy about the stable coins, because we all know that MiCA is in a revision, especially that it's not in the force in many countries yet fully. So I want to highlight that, MiCA was the first rule book about the stable coins, about the CESP in whole European Union, in whole world. Other countries like United States are trying to go to this level. We were the first. Whether it's good, whether it's not, I want to talk about this in our panel. So first question will be to Konstantinos because he has the biggest knowledge about it. So could you give us the clearer vision about something what many people might blur together? So stable coins, tokenized deposits, and future, digital euro, because we talked about it, that there is a policy about making these things together. What does it mean for the market and for us as a potential consumers of these solutions?
Thank you very much. Good morning, everyone. Great pleasure to have you all here. So, as Jan said, we will speak about stablecoins as a settlement asset, because this is what it in essence is. And we will also see how it connects with governance, reserve, and settlement. Settlement, we already answered it. Actually, stablecoins, or if you want more appropriately, so-called stablecoins, are a digital private settlement asset. Do we have other digital settlement assets? Yes. We have the central bank digital currency, and we also have tokenized deposits. The difference between stablecoin and the aforementioned settlement instruments is that the aforesaid settlement instruments are merely different technological representations of the euro and of the deposits we already know. On the other hand, stablecoins are innovative not only in technological, but also in financial terms. It had no precedent until its appearance. Now, the difference between a stablecoin and central bank digital currency is that a stablecoin is not issued by a public body. The difference between a stablecoin and a tokenized deposit is that stablecoins, A, are not issued only by banks, they can also be issued by other entities, and secondly, they do not settle against central bank money. And so the question arises, what do stablecoins bring to the table if they are not issued by a public body and if they cannot settle against central bank digital currency, central bank accounts, which is a safe, trusted asset? They bring a promise of stability. And now, what form does this promise take under MiCA? There are two types of promises of stability, two types of stablecoins under MiCA. One promise is to maintain a stable value by referencing a basket of assets. In this case, we speak about stablecoins called ARTs, Asset Reference Token. There is also another promise of stability where the token tries to maintain a stable value by referencing a single official currency. Then we speak about electronic money tokens. Let's take a closer look at how this promise of stability looks like, starting with ARTs. Like in real life, the first thing that matters when you give a promise is who gives the promise, how reliable is this person. This is why, and this is how governance gets in the game, this is why MiCA requires that the issuer of a ART be EU-based, EU-authorized, satisfies capital requirements which can be increased if the regulator so requires, and that its management body and shareholders are fit and proper. Apart from that, the management body is jointly liable with the issuer in case of misrepresentations. So, in essence, the token holder's claim first line of defense is governance. Now, how does reserve kick in? Like in life, apart from being reliable when giving a promise, you must also be in a position to back your promise. So this is how the reserve kicks in the game. The reserve is actually the collateral. The reserve secures the token holder's claim against the issuer if things don't go that well. Now, exactly because the reserve secures the token holder's claim, the reserve must be legally and operationally separated from the issuer's estate and is not available to the issuer's creditors in case of insolvency. In addition, whenever someone subscribes or whenever someone asks for redemption, the reserve must be increased or decreased accordingly. Now, like in real life, what's the meaning of a promise? If someone is reliable, if the promise is backed, if you cannot force him to honor the promise. This is why stablecoins, ARTs, are redeemable at the option of the investor. Now, in order for the stablecoins, for the ARTs to be redeemable, the reserve must be liquid in order to swiftly liquidate assets and satisfy the claim. At the same time, does the issuer offer stablecoins for the economy's sake to provide the world with an additional asset? Of course not. He wants to make profit. How does he make the profit? By managing and investing the assets included in the reserve. Immediately, this creates an ecosystem of providers. You need crypto custodians and custodians to safekeep the assets. You need asset managers to manage them. You need the mechanism for the minting and for the burning. You need a mechanism to inform the manager of the reserve that someone has subscribed, someone has redeemed. You need ICT arrangements. You need the on-ramp and off-ramp arrangements when someone wants to have them liquidated. Immediately, this creates an ecosystem of providers. Now, how do things under EMTs look like? A little bit more simple. EMTs can be issued only by banks and electronic money institutions. EMTs are always redeemable at par, not at the value of the assets referenced, at the option of the investors. So they can be issued only by banks and EMI institutions, are redeemable at par at the option of the investors, and something many do not take into consideration is that EMTs, EMI issuers are not obliged to form a reserve unless they qualify as significant. So when it comes to EMT, the reserve is not a must. It is a must only when the token qualifies as significant. Instead of reserve requirements, you have the electronic money directive safeguarding requirements apply. Now, we have a recent phenomenon, and I'm closing with that puts the governance and the reserve arrangements of MiCA on the test. The so-called, you may have heard, issue of so-called multi-issuance stablecoins. What happens in this case? You have two entities which are economically affiliated. One is EU-based, MiCA authorized, and another entity affiliated is based outside the EU. They issue two tokens which may have different legal entities as issuers, but share common economic characteristics. They are being issued under the same terms, and because of the technology employed, they become interchangeable, fungible. What does this practically mean? This practically means that the holder of the non-EU token can ask for redemption from the EU issuer. And you understand that there are issues created with regard to the reserve, what happens in case of a stablecoin run. And now this is the reason why the EU Commission, in its recently launched MiCA consultation, asks how to address the issue of multi-issuance stablecoins. For instance, an obligation for reserve replenishment, an obligation for common policies and procedures. So more or less, this is the context between stablecoins, governance, and reserve. We have two types of stablecoins under EU regulation, ARTs and EMTs. ARTs are obliged to form a reserve, EMTs only when they are significant. Governance is the token holder's first line of defense. You need a reliable issuer. The reserve or the EMD safeguarding requirements are the collateral in case things go wrong. And now we have the challenge with the multi-issuance stablecoins. This is under consultation. Let's see how the matter will be taken forward. And having described it from a policy and regulation perspective, I think it's time to speak about the operational and audit aspects of this case. Thank you.
Thank you, Konstantinos. It was very powerful speech about the aspect that not necessarily everybody is focusing on. And guys, Arthur, Nick, because question to you, because we all see the highlights that stablecoins are changing the market. We all see how the market is developing. I don't know, EURC, USDC, Tether. This kind of markets. I know the difference. I know that the Tether is not regulated in Europe, so no worry about it. So it was by purpose. And from your perspective, you fuss between the financial institutions and fintech as a whole. So do you think that when CE businesses will implement these new solutions, it will help our economies, it will boost, I don't know, innovation in our sector, or we will even maybe don't see the change because it will be just only the technological change. So maybe financial institution will implement something, but for the consumer, it will change nothing. How do you think?
Let me share my vision about the stablecoins because Konstantinos shared all the governance and legal part, but it has a huge potential and huge innovational part. As Nick just mentioned a couple of seconds ago, it's a different animal. It's not a traditional crypto as we know, like Bitcoin, and it's not about trading. It has a big potential. Look, stablecoins, it's a new, let's say, type of the money, and it is a new money which can think, let's say. We call it programmable money, and it can has a logic, it can has a new storage like wallets, yes, because traditionally we have bank accounts, we have saving accounts, card accounts, but this one is a new money with new storage. So which can bring to the people, it can bring a lot of innovational things. Until now, we are paying just using plastic card, bank account, but in future, we can use our wallets to pay, let's say, with the glasses or by voice or by, I don't know, touching, because there is less intermediaries between transactions. Usually we have, I don't know, bank account, we have, I don't know, Visa and MasterCard, we have, I don't know, merchants, etc. But now we have only sender and receiver, and brings a lot of good things like, I don't know, low cost, fast transactions, etc. And also it has it also brings very big impact on a cross-border transfer, as we are starting from the cross-border money transfer services between two regions like Europe and the Eastern Europe and Central Asia. We understand that it can bring to the market very low-cost prices, fast transactions, and I would like that we always look to this new animal, let's say stablecoins. I like that word, So as a new opportunity, not only from the central bank's point of view, not only from the regulatory point of view, as an opportunity to redefine that we have until now. Because what we have until now, we innovated in 70s or 80s. So it's time to innovate again, but with new rules and with new regulation, because we are trying to translate old regulation into new reality, new technology, which is not works very good. So let's try to understand how we can define in this era of new technologies, because we have now smart contracts, because now we have new logics, so it can bring a lot of innovation things, not only just replacement of something old that we have before.
Like Konstantinos was saying about the trust, because financial institutions are mostly connected with the trust that they are reliable. So here we are saying that the trust from Bitcoin and at the beginning is transferring to the financial market, that we can believe not only the institution, but as well the whole technical solution that is behind.
Look, we have a blockchain, which is a mathematics. So it's more trusted than the banks, believe me.
That's true. And Nick, for you, do you think that this faster adoption of this, I don't know, stable coins or whatever we'll call it, because not necessarily MT is a stable coin, so this is one issue. You think that it have the potential in our region for, I don't know, cross-border payments to maybe support the companies with export or something like this?
Yeah, hello everyone. Thank you for coming the second day here in Norada. I'm happy to coin the name of animals in terms of bitcoins. Maybe it's a bitcoining what a stablecoin is. So to me, stablecoin is important for our region, especially for dual economies like Romanian, Polish, Czech Republic. We don't want to go into the Eurozone, so stablecoins is a good stuff for us in terms of cross-border, for example. So indeed, we have a farm of animals. We start with cash. We have a lot of cash, at least in Romania. Then what we have electronic money, which is Visa, our sponsor, and MasterCard, and other plastic cards. Then we have instant payments like RoPay and Blik. Then we have what? What's next? Maybe it's a stablecoin. And on top of that will be maybe CBDC. So as Romania is not going to have any soon CBDC, what is left for us as improvement is the stablecoin. Why stablecoin? Because stablecoin is 10 times cheaper than a payment with Visa card or any card in the world. So that's why it's important for us to use stablecoins rather sooner than later. And by the way, there are many stablecoins already issued in Europe by EMIs, but also by the banks. Like I remember Forge, Societe Generale, not available yet in Romania, but there is a coin coming from the Netherlands that will be pegged to the Romanian leu. Why is that? And thank you, Konstantinos, you gave us a great lesson. I would like to see our Ministry of Finance talking like that about stablecoins. It's not the case, but probably they have to. We don't have yet MiCA in Romania. It is delayed by political reasons, so hopefully we'll have it signed Q3 actually. So there are a lot of use cases for stablecoins. Think of, I was saying yesterday, 25% of the Romanians live abroad, and they send home 6.2 billion euros. It would be great if they can send at least 10% of this amount using stablecoins. Why? Because it's much cheaper. So that's the reason for stablecoins. We see differently in Europe than in America. In America, is different. Well, why they don't have a CBDC? Probably you know they want to have the kind of monopoly, international monopoly. So they don't want to have the dollar digitized. So that's why we use private money in America. But with stablecoins in America, we make money. With stablecoins in Europe, it's just a rail. So you cannot put in any interest on top of it. And regarding EMIs, there are a lot of EMIs actually. There are some EMIs in Romania as well, and they are struggling to issue the first tokens. There is a guy here, Iulian Marinescu. If you haven't heard of him yet, he managed to have 2 EMIs established, licensed in Romania, and this is pretty rare. So I think the stablecoins are here to stay. But they will come. They will come from abroad. They will go abroad. You cannot stop them. But we should, coming back to the animals, it's not a crypto.
Yeah.
So for as long as it is pegged to a fiat, it's not a crypto. It is risky. It is risky, of course, because it stays on blockchains. So if the blockchain is broken, then
the technological problem.
The technology is a problem, but
the same with the banks or
exactly.
financial institution. Everybody could be compromised this way or another. And guys, because you mentioned, Nika and Artur mentioned about very interesting use of stablecoins. So international transfers. This is one of the biggest potential for stablecoins. We all agree about it because we know that correspondent banking is something terrible in many situations when you have to promptly send the money from point A to point B. Do you see any other options how the stablecoins will be used and where and why? Some examples, and not necessarily connected with this example that you mentioned already.
Yeah, one use case we are working on, you can pay cross-border utilities in another country. So, for example, you want to pay utilities for your family in Romania from Germany. So you pay all utilities once a month in euro, but you don't know you use actually stablecoins. Stablecoins are just a rail, and that will benefit not only the payers, but also the utility companies. So in this case, most of the time, the utility companies are the interest party because they save a lot of money. Settlement is like smart contracts, if you want. so everybody is happy. Accounts receivable is low. That's one of the use cases. And again, our population in Europe is aging, so it's not only about Romania, but maybe you live in Spain and your parents are in the UK or in the US or New Zealand, so you can pay with stable coins in just a second. So it's not about the technology, it's mainly about regulation. So I think that stablecoin is much better than the CBDC, because the CBDC is meant by the state. People are afraid of it because they think of social engineering, like in China, where the state knows every move you make. With stablecoin, this is private money indeed. So there are many cases in B2B. We talk about settlements. We can have like ecosystems. So you can use stablecoins like fiat money. For example, you can pay the utility bill, and the utility company can pay the suppliers. They can pay everything back to the companies, dividends. So it's a full ecosystem. Think of like M-Pesa in Africa. It was a very successful project, not in Romania, unfortunately. So it's kind of electronic money that goes around. So it's important to use them and not to burn them. So the longer they stay in transactions, that's better.
Artur, and your vision, what do you think? What will be the other thing that maybe stablecoin will be very useful?
Yes, for cross-border transfers, of course, it will work and it will connect a lot of fragmented corridors. But another use case is a wallet as a new storage, which can be embedded in different IoT devices like cars, like glasses, a lot of things. So people can just look at the Apple, scan the QR code, and the transaction is done. So there are a lot of use cases that can bring more, let's say, seamless transaction with the merchants, and of course with low cost fees, because you know how much traditional card schemes are charging now. So it is another use case, and of course it's about the smart contracts and about intelligence. As I just mentioned before, you can put the logic in the money, let's say. So you can give, wallet to your child, and it can be used, for example, only in a buffet in a school, let's say. So it brings a lot of course, there is a little risks, as in everywhere. But anyway, my point of view that we should find out the opportunities, fix what we can fix, what we have now, and then after discover the risks and then try to work on it and then go further, because the evolution of the world is started from there.
No, of course. And so you mentioned about the solutions. We talked that everything is great, like always, because we are expecting that this market will grow because it have huge potential. And what is for me at least very interesting. So question will be to Delia, because if you are a bank, you believe that the bank is solid, that have grounds, that have everything. In many situations, we saw that there are companies that were trying to build the new solutions, showing that, yeah, I have the capacity, I have everything in place, so everything is well prepared. And in many situations, they were using one thing, so showing that, yeah, I have the reserves here, put it, and you can trust me because I have my money here. It's publicly available. Do you think that this is good direction, that this will be the standard in the next few years, or in the sector, or what's your opinion?
Good morning, everyone. I'm going to speak from the chartered certified auditor and also academician and the researcher perspective, so I won't be as technical as the gentleman right here. I think it's a very important thing to make a very clear distinction between proof of reserves and audit, because usually proof of reserves only tells you and shows you just one thing, the existence part, the fact that the assets were there at a certain point in time, just a snapshot of them. But when we are talking about the audit of the financial statements, of course, we need to deal with everything related to the completeness, the accuracy, the existence, of course, but also the valuation, the cutoff of transactions, and also the rights and obligations associated to all transactions and all events that occurred in one financial year. Proof of reserves, from my point of view, only shows you the existence, only tells you that snapshot that had happened at a certain point in time. So that's just one side of the balance, due to the fact that the proof of reserves, in my opinion, does not tell you what's owed against those assets. If they have been maybe pledged or they have been lent out, they do not tell you, for instance, who actually holds them. So we need an audit opinion that must be issued in an audit report. Usually, the audit covers one financial year. So, and it expresses the opinion at the year end, at the 31st of December. A stable reserve, a stablecoin reserve, though, never settles. So it never stops settling. So we need an audit for the books to close.
Yeah, so this is the distinction. So we as financial institutions are prepared that every year we have to publish the financial statement, that we have something in place. And this new market show that, guys, maybe it would be good also to show that what reserves we have during the whole years, to show, for example, and like you mentioned, the proof of reserves, that somewhere there is sitting, I don't know, 300,000 BTC, for example, that we have as a reserve, or USDC or something. So from that perspective, it's changing very, very much. So this will be maybe as a support, not necessarily as the only mean from the regulatory perspective of safeguarding.
Yeah. So we pretty much only see the one part of the balance sheet, the assets part, but not through proof of reserves, but not the other part that also refers to liabilities and what's owed and what should be owed.
Guys, because time is running, the last question to everybody in the panel. So quick answers, 30 seconds max. We know that there is the revision of the MiCA in Europe. From your perspective, what might be good to think about? What should be changed or implemented in the MiCA version 2? Maybe start from Cosmos.
Thank you. I will be very brief. Okay, the review tries to address certain gaps, like the issue of multi-issuance stablecoins. On the other hand, on certain aspects, MiCA could become a little bit more lenient in order to facilitate actually the creation of the market. We have a regulation. Indeed, it was the first of its kind. When in the US they were applying the Securities Act, we had MiCA. But nevertheless, the market is very small. This is also reflected in the denomination of stablecoins, which are dollar reference. So an alleviation of the requirements, especially with regard to euro-denominated stablecoins, might help. But keep in mind, and now I got the point of freedom and the socioeconomic aspects, but keep in mind, from a policy and regulation perspective, when we settle transactions, it's about finality. That we have, Delia make the point about the liabilities. We need that settlement ensures irrevocable transfer of assets without any questions asked. This is only the case when you can settle it against a safe, trusted assets, which in our case is central bank money, central bank accounts. So stability, yes, but keep in mind, when it comes to settlement, it's about finality. Thank you.
Thank you, Delia.
But you have the opportunity. This is the last chance.
I think it's a very important thing to, I mean, it's very important in the digital transformation era to think also about the role of the auditor, because some things are being already externalized to AI systems and digital platforms, and some things are also being checked already by software. So we need to understand very clearly what will be the role of the auditor, but also what will be the role of regulators and also engineers in some checkpoints that need to be done.
Thank you, Nick.
When it's about MiCA, I don't want to change anything. It was changed so many times, so we need something we can overcome or overstep. I don't know. That's why we have auditors and Ministry of Finances and central banks. For us as businessmen, we want to have a cheaper, faster, and permanent rail 24/7 to offer our users, both businesses and persons, to use the money cheaper than what we have today. And then when it's about reserves and things, I think that is a huge opportunity, how to use those reserves and how to invest in bonds. So there are so many opportunities for everyone, not only for the EMIs or banks, but also for in the middlemans in this area. So it's great for everyone. Keep it as it is. Let us do the job. Otherwise, we just wait and do nothing.
I think this period is very important period for Europe because it can bring popularity of euro, let's say, because having Euro C, which is not famous like USDC, Europe, regulators can have these stable coins and popularize them around the world, which can bring a lot of economic impact. And in another hand, as regulators like to regulate, they should also be possible to listen to the market and work with the startups, with the non-traditional finance institutions, because in that case, they can go further and will be more updated. Because in this Web3 world, everything is changed very fast. So tomorrow can happen something different, and plus the AI. So it should be updated and should be on the ground. So if you can write something on a paper and nobody will use it and it will stop some, innovation, market growth, etc., it means it's just on a paper. This is my message to the European regulators, to always be updated and keep in touch with builders.
Great. Thank you very much for your comments. Thank you for joining. I hope that that was interesting for the audience for what we speak about, and hope that we will have opportunity next time to sit here and talk about the Mika number 2. So maybe next year or another. So thank you once again, and if anybody would like to speak with us, we'll be somewhere around. So once again,
Thank you.
Thank you.